Welcome to Shrouded Securities. I'm your host, Spooky. In today's briefing, we'll be taking a closer look at the iShares Semiconductor ETF, ticker symbol SOXX, or SOXX. The SOXX ETF seeks to track the investment results of an index composed of U.S.-listed equities in the semiconductor sector. In other words, this thematic fund provides targeted exposure to companies involved in semiconductor production and supply. Some background on the fund. It was launched back in July 2001 and has grown to become one of the largest ETFs focused on the semiconductor industry, with over $12.9 billion in assets under management as of March 2024. SOXX is advised by BlackRock Fund Advisors. Taking a look under the hood, SOXX currently holds 30 semiconductor stocks. The top holdings include many of the familiar giants in the space, such as NVIDIA, Broadcom, AMD, Qualcomm, and Intel. Together, the top 10 positions account for over half of the fund's assets. In terms of market cap allocation, SOXX is heavily tilted toward large-cap stocks, which isn't too surprising given the mature nature of many semiconductor businesses. However, investors will also get some exposure to mid-cap names. It's also worth noting the recent performance of semiconductor stocks. The industry went through a major slump in 2022 amid slowing demand and oversupply concerns. SOXX suffered a loss of over 35% that calendar year. However, semis have rebounded sharply since then, and SOXX has participated in the recovery, rising over 46% year-to-date through June 2023. This partly reflects growing optimism around artificial intelligence and other advanced computing applications that are expected to drive long-term semiconductor demand. With more and more connected devices and ongoing digitization of the global economy, semiconductors are often viewed as a critical area for continued growth and innovation. Of course, potential investors need to evaluate the costs as well. SOXX comes with an expense ratio of 0.35%, meaning $35 in annual fees for every $10,000 invested. While not the cheapest sector ETF out there, this is a fairly reasonable price point for the category and shouldn't eat too greatly into returns. Additionally, turnover for the fund has averaged 18% over the past year. This implies a relatively low-churn buy-and-hold approach that allows SOXX to operate in a mostly tax-efficient manner that ETFs provide. So why might an investor consider owning SOXX in their portfolio? For one, the fund offers pure play exposure to the semiconductor industry within a single ticker. Rather than researching individual stocks, SOXX allows you to easily invest in a diversified basket of some of the world's leading chipmakers. This can be attractive for those who want to gain targeted exposure to a long-term secular growth theme. Semiconductors are essential components of many next-gen technologies, from electric vehicles to IoT to artificial intelligence. As the world becomes increasingly digitized and connected, semiconductors could see robust demand for years to come. That said, there are risks to consider as well. Semiconductor stocks tend to be quite cyclical, and their performance is heavily tied to supply and demand dynamics in the broader economy. The industry's notorious boom and bust cycles can lead to periods of volatility and sharp drawdowns. SOXX's concentrated nature also leaves it more susceptible to company-specific risks. Problems at any one of the larger holdings could have an outsized impact on overall fund performance. As always, potential investors should carefully evaluate their goals and risk tolerance before buying shares of any ETF, including SOXX. We don't endorse any fund. Be sure to read the prospectus and consider consulting with a financial advisor. Thanks for joining me for this look at the iShares Semiconductor ETF. I hope you found this briefing insightful and informative. If you did, please consider liking this video and subscribing to the Shrouded Securities channel for more content like this. Until next time, I'm Spooky, wishing you profitable investing and good health.